Okay. Then again, for this, now we have been doing, or now we will start our chapter of ratios, right? But before we get into the chapter of ratios, let us understand and also clear off something which you have wrongly learned so far. Okay. Now, what happens over a period of time is you accumulate knowledge during, especially in the fields of accounts, you prepare financial statements in inter level 1, inter level 2, or plus 1, plus 2, or how the your stuff would be. But there are two things: one, preparation of financial statement, and another, analysis of financial statement. So when we talk about analysis of financial statement, is altogether a different game, because analysis of financial statement requires lot of understanding of how the numbers are playing out. Okay, this will also require you to compare the numbers of previous years numbers with the other peers of the industry, right? So all those things is very much required, and in that particular pattern we introduce a concept called ratio. Ratio is nothing but a, what you can say, a denomination or a number which will represent a relationship. Okay, relationship between what? Between two items of a financial statement. So what is ratio? Ratio is a relationship between two items of financial statement. Are we all good here? Yes, please make a note. Ratio is a relationship between ratio is relationship between what, guys? Two or more, two or more items of financial statement. Now, what all the word you are able to understand in this line? This is not a correct definition, but this is a crux of the definition. Relationship means you, one would be related to another. Like leverage is a relationship between contribution and EBIT, but that relationship explains you that how much risk a business can take in terms of fixed cost. Okay, operating leverage is also nothing but a ratio only. Okay, but that is more focused on risk aspect rather than analysis aspect. So leverages will tell you how much levered we are, how much risk we are bearing, how much risk bearing further capacity we have. So that all we will understand from leverages. But when you come to ratios, their purpose of what we can do, what information we can provide to the decision makers or investors is very huge, right? So that's why ratios do not only pertain to one factor or one such thing. It pertains to n number of things or n number of factors which could be possible for you. Broadly speaking, ratios can be classified into certain categories like profitability ratios, solvency ratios, capital account ratios, capital gearing ratios. All those things is possible, but still, what do I mean to say? It would have a very wide scope of application. Especially, institute love ratios a lot. You know why? It makes things complicated. Instead of straight away giving you the numbers of equity, share capital, sales, the last problem which we did of this thing, what should I say, the leverages, you would have understood how ratios will complicate things. As of now, I don't know why institute is doing this way, but still take care. That's why understanding of ratios, how the ratios are formed, is there a simpler way to learn all the ratios, is a agenda of this class today, right? So before we start the agenda of the class today, I want you to have an understanding of what is a financial statement. You will come back to me, sir. What is this? Every time we have learned financial statement also. What do you think we don't know what is a financial statement? We know everything. We know up to even schedule 3 of financial statement. My purpose is again not accounts. Finance starts when accounts end. So your financial statement, whatever you have learned, you can easily forget it, no problem at all. Let us relearn the financial statement from the perspective of ratios again. What do the major two statements which are covered in financial statements here? They basically, there are three components. One is balance sheet, profit and loss, cash flow. For time being, I am not considering cash flow here, right? So there is profit and loss statement. Let me just put it into a T format. Similarly, I have balance sheet. Let me also put this into a T format. Okay. So tell me, what are the parts of P&L? What do you see? What numbers which you write in P&L? Tell me. Sales, okay. Expenses, okay. Stationery expense, okay. Purchases, okay. Bad debts, okay. Yes. Gross profit and loss is a balancing figure. I don't think so. You put that. Huh? Provisions, okay. Discounts, okay. Depreciation, interest. All those numbers do not make sense in ratios. Ratios focuses on grouping. What is a grouping? All similar nature items group in one. Okay? Individually anybody can break you, but once you group yourself, nobody can break you. Like you said, sales, like you said, incomes, like you said, certain other operating income, non-operating income. One girl told, sir, there is gross profit, net profit. Agreed. That gross profit, net profit, don't you think there is no requirement of having two profits? Gross profit, again you do carry it forward, and then again you find out net profit. Why they are asking you to total the same thing in two times in the same statement? Why don't you ever ask your plus one, plus two faculties this question? We are very weak in asking questions, no? So that is the problem of a student life. Student should not be smart in giving the answer, but student should at least be smart in asking questions. Why none of you have asked your faculties earlier when you started learning accounts, sir, why we are totaling the profit number twice in a P&L statement? We can total at once only in a down. Why you are increasing my work? Yes or no? Yes. Any answers for that? Okay. So you mean to say I wish to bifurcate trading, non-trading, manufacturing, trading. That's not the fact. Big answer, but not the correct answer. Answer lies in the income statement. Not 100%, but yes. In income also, you should have asked me the same question. I gave you the answer. Why you are bifurcating the expense into variable and fixed? Because the nature is different. Yes or no? Nature is different. Yes or no? Similarly, here also, why we are bifurcating the gross and net is because the nature is different. Not only on the expenses side, also on the income side. That is something I believe you not have focused, but nature is different both on the income as well as expense side. Let me just do a grouping number. Can I call this as this side of this is credit side of P&L, this is debit side of P&L, right? This is basically a statement, not an account. So they will not have a debit and credit, but still, just for your better understanding, this is an income side, this is an expense side. So this is an liability side, then this is an asset side, just for your understanding. Huh? Are we all good? Yes. So can I name this as, so it will include, for an example, sales, but suppose your customer, you have only shipped the material to your customer and you have charged him transportation charges. That will also come revenue from operations. Yes, there was income because of the business. All that will come here. Yes or no? So do you have, can a business earn otherwise than revenue from operation? Suppose your surplus funds in the business, you made an FD with a bank and you are getting an interest income. Would you call that interest income as a revenue from operations? So whether it should be included in your gross profit? Why no? That income will happen whether or not you do business. Am I right? Interest income will happen whether or not do you do business. Are we all good here? Yes. Similarly, there are certain expenditures also that will happen whether or not you do business. Are we all good? So now you will be able to unfold your knowledge. Oh, that's why we used to calculate gross profit. Are we all good? Yes. So I'm just mentioning one line here. Can I now write down one more box and call this as, I'm not using the word income, because as soon as I use the word income, smarter people will say income is nothing but revenue minus expense. Revenue other than operations. Matlab any other revenue which is not happening because of operations. Are we all good here? Similarly, here also expenditure also there is a bifurcation. No doubt you will have a balancing number called BF, called but in order to find out gross profit, you are supposed to have something called as cost of production. How much you incur in order to produce. Sir, I'm not a manufacturing entity. You use production as if your cost of operations. ठीक है? Yes. Then is it over? No, sir, not at all. What we do, we'll have something called as please tell me what is this cost after gross profit? Cost other than production or operations. Are we all good here? A chartered accountant office paying salary to their CA articles would be cost of operations or cost other than operations. A chartered accountant office making a payment of salary to their office boy. See, the same item, two classifications. You understood why? Because CA article is directly related to my revenue from operations, whereas office boy is not. Are we all good here? Yes. Now, then you will have a net number which is called is it the end of PNL or can we further divide? Further application. This says why we are transferring the reserves here. In case we want to do what? Yes or no? Are we all good? Yes. So this is my profit and loss account. Arey sir, we have never seen a profit and loss account only ending in 6 items. Sir, there are 8 in your paper. Arey sir, 2 are balancing figure. Done? Are we all good here? Yes. Can we come to balance sheet now? Balance sheet you can answer. If you have now knowledge with schedule 3 or something, now you can answer balance sheet. Let's see how many of you can answer. Balance sheet can be divided into how many parts? First answer me this. Least possible parts, not maximum, least, not that least. Okay, some people say 4. First they said 2, only asset liability khatam. The part, least possible part, but they should represent all sectors. 6. Okay. Let's see. Your 6 are. Oh, now they have come to the correct number, that is 5. First one first. Can somebody name this? Very good. It is not that current which you get by touching electricity, it is non-current asset. ठीक है. I don't think so. I need to explain that an asset would be qualified or classified into current and non-current based on its time taken to convert into cash. How many of you know this rule? An asset will be classified into a current or a non-current based on the time which it takes in order to complete its journey from cash to cash. Yes. What is this terminology called? What is this terminology called? Time taken from cash to cash? Very good. Operating cycle. Yes. Operating cycle. Because operating cycle is the benchmark for you to decide whether an asset would be classified into an asset or whether an asset will be classified into a current or non-current. Are we all good? Sure. Can I elaborate a little here? Anyhow, we have examples of operating cycles and questions also on operating cycle. But can I elaborate here? For an example, I paid cash, the cash outflow to supplier. for purchase of raw material. This is paid on day 0. Supplier shipped raw material on day 10th. Workers started production on day 15th. ठीक है. Raw material converted into WIP on day 18th. WIP converted into FG on day 24th. FG was in stock until day 45. Stock was transferred on sale basis to debtor on day 45 only it was transferred. So stock that FG was in stock for up to day 45. Stock was, you can say, was transferred to agent on day 60th. Agent sold to customer, or you can say debtor, because he is not paying you cash upfront, on day 70. Right? Yes. Then debtor paid to agent on day 120. Agent paid to the company on day 150th. So how much is your operating cycle? That means an item, any item of assets, if it takes less than 150 days in order to convert to cash, or up to 150 days, then it will be classified under current asset. Otherwise, non-current asset. Earlier, the definition was pretty simple. It was 12 months. Anything which is below 12 months, current. Anything which is above 12 months, non-current. But now the revised Schedule 3 definition says operating cycle. And what is an operating cycle? It differs from business to business. If I just take the beer manufacturing, then FG to stock, the stock holding period would be somewhere around 1000 days. So, in case of a beer manufacturing or a spirit manufacturing company, the operating cycle would be 3 years. So, even then, the stock would be classified as current. Got my point? Yes. So, that was the purpose of operating cycle. We have actually deviated a little bit from the topic, but still, have you understood this? Done? Yes, if you wish to make a note, you can make a note, or else we'll continue. This is just an hypothetical example. Done? Right? Now come to the liability side of the balance sheet. Obviously, when you have current, you will also have assets, then you will also have something called as current liabilities. Right? Then if you have current liabilities, then it is bound that you have non-current liabilities and current liabilities, then it is also bound that you will have owner's fund. Are we all good? We'll have something called as owner's fund, right? Okay, right. Now, in discussing leverages introduction, also I gave you a framework how the ICI has designed your curriculum. Okay. Can I give you one more framework that will enhance your understanding of financial management further? Now, everybody has to be with me, right? Please focus 100% here. Study of current and non-current liabilities, current assets and current liabilities is called working capital. Do we have a separate chapter on working capital? Very good. Study of non-current assets can be related, it is not exclusively, but can be related to something called as capital budgeting or majorly investment decisions. Yes or no? Do we have this as a separate chapter? Module 2 तो इधर ही cover हो गया sir. Module 2 of CAIFM has been covered here. दो parts में. अरे balance sheet इतना detail है क्या? Yes, it is that detail. Right? Sir, then there are so many things left out. What is left out? Sir, non-current liability. This is not dealt by one chapter, two chapter combined. One chapter was not sufficient to take care of this. What is that? Yes, it is cost of capital and capital structure. Two chapters we have. Yes or no? Yes. Now, if you come to owner's fund, what does owner's fund says? Right? Dividend decisions. Dividend किसको जाता है? Owners को जाता है. Earlier, the dividend decision in the old syllabus, before 2017 syllabus, was a CA final topic. Advanced capital budgeting, which you say as analysis of investment decision, was also CA final topic. So those two topics were cut from CA final, pasted here. Is there anything have gone out also? Funds flow statement has gone out. Funds flow, cash flow karke, there was one topic which they deleted only. They said already we are teaching in accounts, why do we teach again? Got it? Yes. So that is called dividend decisions. Again, cost of capital also required because cost of equity comes under this part only. Yes. So one balance sheet have capital budgeting, working capital, dividend decision, cost of capital, capital structure. There was also one chapter earlier called leasing decisions. Leasing. Instead of buying an asset, we'll lease it. So that will be again given for non-current assets. You are lucky. नहीं है. Yes. Now let's go further. So P&L also, are there any studies? Yes, it is. You just now have studied the whole P&L under leverage. Whole P&L only have studied under leverage, right? Yes. Tell me which chapter is left out, which is not covered here. Ratios. Everything comes under ratios. P&L plus balance sheet comes under ratios. Please go through, check out. Guys, you can clearly see. See, that's why source and objective of finance and theory of finance, that is the theory part. Ratio analysis, we are dealing everything in ratio. So that's why leverages and ratio is basic. That's why I kept here in basic tools and learning. आप मेरी बात समझो यार, हम भी कुछ थोड़ा बहुत पढ़ के आए, ज्यादा नहीं तो. Yes, cost of capital, capital structure is the second part which takes care of owner's capital and non-current capital, non-current liabilities. Then your balance out working capital and investment decisions will take care of asset side. So basically the second part is your liability study, third part is your asset study, first part is overall study and income statement studies. That's it. हो गया ना FM. Easy to understand or not? 60 marks आपके जेब में है नहीं है, 10 तो already है sir. 10 is already there in my pocket. Yes or no? Right. So now, as one student rightly said, sir, where is ratios? So ratios goes like this: P&L plus balance sheet plus some ICAI masala is equal to ratios. Where is that masala is been used, then things become tougher for students. That's it. Okay. So this is what ratios is. Right? Do we have a bird's eye view of the whole institute study material? Yes or no? Do we have the whole this thing? Or you can say ratios and leverages. Why do we leave leverages also? Ratios and leverages. But leverages are still innocent people. They do their job and go off. But ratios don't. Okay. Ratios question, institute do not have to ask you separately. They can ask you in any question, they can insert a ratio. That big is the topic. You are solving some working capital and ratio comes up. Very much possible. I would actually recommend institutes to not ask ratios question as a separate question. Include कर दो. Every question includes some ratios. 2 marks ratio. देखो बच्चों की कितनी हवाई उड़ जाएंगी. So that's how the stuff is. Are we all good here? Done? Okay. Please make a note, sir. If you have already made, let me know. We'll go forward. Done? Okay. Now, this is something which I have designed, which I am going to talk to you about. Yes. Listen to me and then you can tell me whether you are supposed to appreciate or not. With your own simple common sense, tell me how many ratios, like there were 3 leverages. How many ratios will be? Permutation combination, there was one chapter in CA foundation. Even maybe in your plus 1, plus 2 it might be there. So tell me how many ratios could be there. You will never be able to count the total number of ratios even though you have complete knowledge of permutation combination. Because each item could be related to every other item and create one new ratio. Imagine for sales, sales can be related to every item in P&L, every item in balance sheet, and will give you sales asset to turnover, asset to liability, asset to net profit, asset to gross profit, asset to depreciation. Anything, whatever they come their mind, they can give you that ratio. Yes or no? Yes. So can somebody do that computation? So if you just look at this grouping. I'm not going in detail. So when you solve the problem, you have to do it in detail only. 6 plus 5, 11 parts. 11 to the power of 5. Or what should you do? 11 to the power of 11? or 11 to the power of 10 at least you have to do. So that many ratios are there only based on this broader categories, because each one can be related to the other. So every time you'll get 10 ratios, 10 into 11 at least. Oh, calculator में numbers नहीं आ रहे हैं. Okay. So that's how that many ratios can be created. And we as a student also forget or don't try to get into the concept. Once you get into the concept, even if there are 1 trillion ratios also, it doesn't matter to you. So that important concept I am going to deal. So can I request your 100% attendance, every person who is listening in live, recording, whichever mode you are listening? Yes or no? So come down, sir. One thing we have understood so far, that there are two statements, P&L and balance sheet. Which is a superior statement? No, you cannot say any statement as a superior, any statement as a inferior. But there is a fundamental distinction between these two statements. Can anybody tell me that? No. Please give yourself a time. Understand the fundamental difference between these two statements. I know that it is an income statement, that is a statement. Fundamental difference between the statement, please. Let me give you a hint. So understand how weak are your basics. I'm sorry to say, but that is the case with most of the students. Whenever you write the profit and loss, what do you complete it? Profit and loss? आगे क्या लिखो? So what do you say? Profit and loss. That means it is for 1 year or whatever period you specify. But when you write balance sheet, so that means very important, is the P&L on that date? Suppose you get a net profit number, is that on that date? On that date you might have a zero profit, but it is accumulated for a period. The period could be anything, generally 12 months. Correct? But when we go to balance sheet, how is the balance sheet playing out? How is the balance sheet playing out, guys? It is on that day. I say as on 31st March 2022, for an example, debtors are 1 crore. That means on that day I have to receive 1 crore. It is not that over a year I have sold for 1 crore. No, na. If you want to see the total sales, you can go in the P&L. But as on date, I have 1 crore liability, I have 2 crore rupees asset, I have 3 crore rupees owner capital, anything it could be. But it is on that date. As soon as date changes, number changes. Yes or no? Yes or no? Am I good? Am I good? Yes. Now a fundamental concept of mathematics. What should be a numerator? What should be a denominator? Ratio is nothing but a numerator divided by denominator at the end of the day. Yes or no? Ratio is nothing but a numerator divided by a denominator. Do we all agree with this? Do we all agree with this? इतना तो मैथ्स आता ही होगा ना, एक न्यूमरेटर होता है, एक डिनोमिनेटर होता है, करेक्ट? Yes. Now think in a very simple logical manner. How do you denote things in your practical life? In your practical lives, how do you denote things? A school will say we have a 1:20 student ratio in the classroom. What does it mean? That every one teacher for every, right? This is a general use of ratios in a practical life. Yes or no? Yes or no? Guys, am I agreed here? Okay. Similarly, there would be some ratios like in Tirupati, if you go, we will give you only 4 laddus for family. ऐसे ही होता ना? Yes. Am I making sense? Generally, it could be in similar fashion only it can go, na? Right? Nowadays, so they will not give anything for free also. But So similar manners, what do you understand? The denominator is more or less the constant. Denominator part is more or less the constant. 20 students divided by one teacher, 4 laddus divided by one family. Simple ratios. These are simple ratios, right? Yes or no? In a Indian Railways will say each bogie, right? Each bogie will have 2 seats for senior citizen. Your TSRTC would say we will reserve 10% of the seats for handicapped and women or something like that. So what is happening? Every time constant is train, bogie, bus, right? Yes, the constant is there in the denominator. The major constant part is there in the denominator. Now tell me, in the P&L and balance sheet, which is more constant? Constant. Constant means against whom I can relate. Students are able to relate to a teacher. The number of seats would be related to the total number of seats in the bus, right? The number of laddus in the temple would be distributed in terms of number of total devotees come to the temple. Are we able to understand? Yes. The sales, for an example, in a company, I will say I am doing 2 crore rupees sales. Finance manager will say, Bewkuf, 2 crore sales, against that you have 2 crore rupees of debtor. That means you are not doing any, you are not able to realize your sales. You are a very bad company. Yes or no? Against a 2 crore rupees sales, you have a 2 crore rupees debtors. That means you are not able to realize your debtors. Am I making sense? Right? Am I making sense? Right? Now, somebody will come up and say, boss, I have made a turnover of 1 crore. Somebody will come up and say, if you have made a turnover of 1 crore, why your inventory is 1.5 crore? Why you are holding such a high inventory? That means stock. So what is happening? Every item in P&L will scout for their constants. Am I making sense? Basics है ना? Basics ही है. So every item in P&L will scout for their constants. Now just imagine. Just see, does every item in P&L would find a constant in the balance sheet? Interest, debt, profit, equity, dividend, equity, depreciation, assets, sales. There would so many constants you can take. Are you able to find out constants? Yes or no? I'm not teaching FM now. I'm teaching maths. Right? Are we able to find out constants for each and every item? Guys, please focus. Yes or no? So, with this discussion, what do you understand? Constants will come in what? Numerator, denominator. So, can I say the denominator should be occupied by a balance sheet item? Everybody still doubts? Generally, can I say the denominator should be by a constant and constant should be by balance sheet item? Because we look for constants other na. Why we look for concepts in balance sheet? Because it is as on. It is fixed on that particular date. But is P&L fixed on that date? No, P&L is for the period. Because those are variables. But I am constant. How many of you know the structure of an atom? ATOM, not atomic bomb, atom. So there are 2 items to an atom. Proton, electron. So there is one constant and another person goes around. So this is how the whole universe has been made, my dear students. For every variable there is a constant. Constant is something which keeps the hold on the variable, otherwise you will go bust. You cannot hold yourself as a body if suppose you don't have a constant. In the mythology of Indian mythology, they call that as an Atma. I don't know whether you will be able to understand such a deep topic, but that is how the variables and constant are being related. That is deeper is the concept of variables and constant. You cannot see a universe without having a constant to an item. Every variable will have an item, otherwise there will not be an item. Yes, are we all good here? Yes. So that means everything which you learn in your life, which is as small as financial statements, would have to follow the universal principle. Correct? So now, if you are agreed with me, can I say if I make a ratio, again I am bringing it down, you will go into mythology, Ramchandra and all those things. Let us come down. That would be a topic for a different session then. If I am making a ratio wherein a profit and loss item and a balance sheet item is used, then tell me which item would be numerator, which item will be denominator. I am so proud of you. So generally, if a ratio is been formed by P&L and one item of P&L, one item of balance sheet, then I will call this as, then automatically the ratio formula would be P&L by balance sheet. Asset turnover ratio. Is this one item from P&L, one item from balance sheet? By the name, can you identify this? Do you have to by heart? No. Can by the name, can you identify this? Yes. So what does turnover refers to? Sales. Sales comes in P&L. Asset refers to asset. Asset comes in balance sheet. So what should be the numerator? Turnover. What should be the denominator? Simple derivation of a formula. Any ratio for a matter until unless there is an ICI masala. Right? So would be by the same concept. Right? Those ICI masala formulas are actually not the fundamental formulas. So that's why they tweak the formula, the ratio will become reverse. Some velocity examples or something, some data velocity ratios and all that stuff, but that as of now we can avoid. Otherwise, what we call this as, any ratio with profit and loss and a balance sheet, profit and loss will be in the numerator, balance sheet will be the, right? Are we all good? Are we all good? Let us name this kind of a formula. Let us give a naming. Let us do a naming ceremony. Yes. You know how the plants are grown with good strength? You know, hybrid plants. Yes. Now, in nowadays, you can have Dasheri yam along with Totapuri yam in one single piece. What they do? They do hybrid. They take one seed from there, one seed from there. In the laboratory, they attach and then make a new fruit. Correct? Similarly, this is also one from one item, one from other statement, right? So we'll call this kind of a ratios as, cross hybrid ratio. Or you can give your own name, that is completely okay, because anyhow this is not in your ICI books. This is something which I have created out of me. Sir, then what about net profit ratio? What is net profit ratio? Net profit and sales, these are the two items of a net profit ratio. Gross profit ratio. Yes. So what is happening? It is not a cross hybrid. Both the items are from the same current asset ratio, current assets by current liability. Both the items again are from balance sheet. Possible? Not all the ratios will be cross hybrid. Some ratios would be single hybrid. Both the items are coming from the same statement. Both the items either from P&L, both the items either from balance sheet. Is there any permutation combination possible? No. Either both P&L, either both balance sheet, either one P&L or one balance sheet. This one we have studied. This one, sir, as I told you, if you use only balance sheet, both are variable. If you use PNL, both are variable. Universe is not possible. Universe is not possible. So that is called as single hybrid. So what is a simple way of looking at those simple hybrid formula? There is no easy way to do it. This is all nuisance. So what do you do? Basically, the understanding of this kind of formulas, which are single hybrid formulas, are first come first. The name which is written first will come in the numerator. Net profit ratio, automatically net profit, so net profit numerator. Current asset ratio, current asset numerator. Right? Are we able to understand this? So when the first word is generally taken as numerator, but there is no thumb rule, ICI masala. And here ICI does all notorious things which actually they should not do. They will write something called as this single hybrid ratio, but they will give formula reverse in the suggested answer. Okay, but still 90%, how many percent? First word will come to the numerator. Automatically, na? You should see, you cannot everything get by a concept. Something you have to also learn. Na? You should be at least in a position to identify two parts of a formula. If suppose you are not in a position, net profit and second part, what should aim chest call it? It is by default sales. So that much you should take it. Sometimes the formula will clearly give you two parts, like asset turnover, clearly given. Sometimes they will not give you current asset ratio. They have not given the what is the second part, current liability. That much you should know. That much you should know. When you will be knowing, you should have known by now. +1, +2 was for to understand the parts of financial statements, right? Yes. So this much you should know. Sir, I cannot remember this much. You will easily remember by the end of the chapter. You can easily find out what are the two parts of the formula, right? Are we all good? Yes. I will dictate some notes. Write it down. As we all know, as we all know, each ratio can be derived by a formula which is generally a division function. You understand what is the division function? Addition, multiplication, subtraction. Similarly, you have a division function. Second point. Second point. A division function by default. A division function by default will have a numerator and a denominator. Third point. Ratios will be made out of two statements, that is profit and loss account statement and balance sheet. Ratios will be made out of two statements, that is profit and loss account and balance sheet. Fourth point. Basic fundamental is profit and loss account is for a period. Basic fundamental is the profit and loss account is for a period, whereas balance sheet is on the date on which it is drawn. Balance sheet is on the date on which it is drawn. Whichever day you make the balance sheet, it is for that day only. Balance sheet is for the day on which it is drawn. D-R-A-W-N, drawn. Even today, we use the words draw the books of accounts. That means books of accounts writing is been considered as an art. It is an art. Once you become a chartered accountant, you will understand. Actually, making a financial statement is an art. When client will come to you and say, "Sir, thoda profit kam karo na, sir." So that is where your simple writing skills are not required. Your art skills are required. Okay. So now, sixth one. The fifth one, sorry. I am hungry, no, so Ekadashi is there. Okay. Fifth one. Balance sheets item are considered as constants. Balance sheet items are considered as constants and write down and will be relatable to one or more item in P&L. One or more item in profit and loss account. Second, next point, sixth point. Same applies. Profit and loss items, profit and loss account items are variables. Profit and loss account items are variable and are relatable to one or more balance sheet item. Done. Next item. Universal calculation of formulas, universal calculation of division function says, universal calculation of division function says a presentation of an answer will be variable divided by constant. Will be variable divided by constant. Next point. Therefore, therefore 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 in a ratio wherein profit and loss and balance sheet item is identified, where a ratio wherein, therefore in a ratio wherein a profit and loss and I'm using the word and a balance sheet item is identified, there the look like formula would look like profit and loss account debit divided by balance sheet profit and loss item divided by balance sheet item. Yes, next point. Next point. This way of deriving formula, we call it as cross hybrid ratios. This way of deriving formulas, we call it as cross hybrid ratios. Next point. In case a ratio is singular in nature, that means in case a ratio is singular in nature, that means both the items of division function both the items of division function are either from both the items of division function are either from profit and loss or balance sheet, then no set principles can be applied. No set principles can be applied. No set principles can be applied. Still, based on general acceptance, Still, based on general acceptance, first appearing item in the name of the ratio, first appearing item in the name of the ratio will be taken into numerator, and first appearing item in the name of the ratio will be taken into numerator, and second appearing item will be taken into denominator. Second appearing item into denominator. Next point. And second appearing point into denominator. Next point. Let us name this singular division function as single hybrid functions. Next point. Next point. The above concept only covers ratios which have only two parts. The above concept only covers the ratios which have only two parts, but not beyond. The above concept only covers ratios which have only two parts, but not beyond. If suppose there is a ratio we require 3-4 different calculations, then you cannot use this, then you have to learn that ratio. And obviously there might be some exceptions, See here, this is the course content of ratio analysis chapter as per ICI. You have liquidity ratio, current ratio, quick ratio, cash ratio. Then you have capital structure ratios and coverage ratios, which could be equity ratio, preference ratios, debt ratios, proprietary fund ratios, debt equity ratio, capital gearing ratios, and all coverage ratios like interest coverage and all the. Then you will have some activity ratios, right? Stock turnover, fixed asset turnover ratios. Those are all turnover ratios or velocity ratios. And then you will have ultimately profitability ratios. Those are all profitability ratios based on sales, all profitability ratios based on investment, and other profitability ratios. Are we all good with this? Yes. Then let us formally learn what is ratio analysis. Ratio analysis is based on the fact that a single accounting figure by itself may not communicate any meaningful information, but when expressed as a relative, that is what we understood, there was a relationship between two items, to some other figure, it may be definitely provide some significant information. Just looking at, okay, sales is 1 crore, one company sales is 500 crores, one company sales is 1000 crores, what could you make out? You cannot make out anything. Even a company with a 1000 crore sales might end up in loss. Even with a company with only 1 crore sales might end up in profit. So obviously you require a net profit ratio in order to understand this. So that is what it means to say. Ratio analysis is not just comparing different numbers from the balance sheet and income. It is comparing the numbers against previous years, other companies, industries, and even the economy in general for the purpose of financial analysis. Ratio can be classified into following 4 broad categories. Liquidity ratio, that means how much cash flows we are able to manage. Liquidity and profitability are two very important learning for any investors, any company, and anybody who wants to make a judgment based on a financial statement. So liquidity tells you what is the cash position of an enterprise. Profitability tells you what is the profit making position of an enterprise. Then you have capital structure ratio, that is leverage ratio, and then you have activity ratio. Let's see solvency ratio or liquidity ratio classification in view of analysis, financial analysis. Solvency ratios could be short term, long term. Again, short term solvency ratios are known as liquidity ratio. Long term solvency ratios are known as capital structure or leverage ratios. Done. What is a short term liquidity? Current asset. Working capital is short term, no? Current asset ratios, quick ratios, cash ratios, liquid ratios, right? Similarly, when you go long term, equity, debt, debt equity, proprietary funds means owner's fund, capital gearing ratio, so that become long term. So basic understanding has come to your mind. Okay, whenever I talk about cash position of a company, it could be again classified further into short term, long term. What is short term? Am I able to make my monthly salary payments? Am I able to make my monthly rent payments? What is long term? Am I able to repay my loans? That is long term. So that thing we will be able to understand by short term and long term liquidity ratio. At the same point of time, as I gave you on one example earlier, I have 2 crore rupees of sales and 2 crore rupees of debtors. Is it a good company to invest? Profitable. Everything is profitable. Good profit. Everything is good. 2 crore rupees sales I have done only on the cost of production of 1 crore. So 50%, 100% profit on cost. But is it still a good company? Or you don't have a capacity to realize your debtors, mostly will end up in bad debts. So that analysis is also important, right? So that is called activity. That is called activity ratios. So activity could be in any term, sales to debtors, sales to stock. So it has to be fixed to something, right? So you have the inventory ratio, debtors ratio, creditors ratio, fixed assets, working capital, capital turnover. Obviously, I invested 5 crores in a business and only doing a sales of 5 lakhs a month. बोलता 5 करोड़ रुपए लगा के 5 लाख का सेल्स करा, पागल है क्या? कैपिटल टर्नओवर रेशियो के इतनी बड़ी कैपिटल, इतना छोटा टर्नओवर. Yes, so that is again important. Profitability ratio. Now comes your actual profits, that net profit, gross profit, operating profit, expense, how much you are spending in relation to investment, return on investment, return on share capital. So these are all things. Now here each formula has been defined. मतलब formula का formula दिया हुआ, major formula. Still there might be trillion ratios, but we are discussing only majors. So current ratio is what? Current assets by quick ratio. Again you will remove those current assets which are going to take relatively more time to realize, like stock will take relatively more time to realize. So from the current asset you remove stock, so then it becomes current asset minus stock, so that becomes quick asset divided by quick liability. Again from the liability also you will remove some liabilities which you are not supposed to pay immediately, so that would be removed, so that become quick. So even matlab current assets will anyhow will give you short term liquidity. You want even further short term, then you will go for quick ratio. Then you have cash ratio. What is market, how much cash you have in your books against the current liability. Like suppose I have 10 lakh rupees of cash, but I have my current liability of suppose say 10 crores, and with a daily payment outflow of 20 lakhs, 20 lakh rupees का daily payment होता मेरे पास से. So then array I don't have a cash in order to make the daily commitment. I might be very profitable business, but in order to be profitable is good thing, but you have to survive on a daily basis na. If you don't pay your creditors or your bankers, they will come kill you, insolvent. So that's why liquidity is equally important as profitability. Equity ratio, that is equity by total capital employed. Debt ratio, debt by total capital employed. Debt equity, debt divided by equity. Yes, those are all long term liquidity ratios. How much debt we have. I have a company with only 2 rupees of equity and 100 rupees of debt. Possible, very much possible. Indian Railways, because they require a lot of debt, but in that case actually that is not debt, it is government fund, government capital, right? Now this is how if it is a very capital intensive business, they might require lot of owners equity, but that will not be possible. In case you have very high cash rotation, then you can take debt because you will be able to service it. Debt service coverage ratio. What is debt service coverage ratio? That means, are you able to pay off your interest on time? Are you able to pay off your EMIs on time? That is called debt service ratio, right? You, how much fund is available in order to pay off the interest, that is called service. For an example, I have a profit of 2 lakh and I'm making an interest payment of 1 lakh, so I am making twice that of interest. So that is what he says, profit after tax plus depreciation. Why? Depreciation is non-cash. You know that depreciation is non-cash, plus interest, because interest is something which you are supposed to pay. So this is the total fund available with you divided by annual installments, your EMIs plus interest. So if suppose it is greater than 1, that means you are happy, you are easily able to service your debt. So that is called debt service ratio also. You know, the name itself is debt service ratio. What bankers would be interested in seeing this ratio only ना. अरे भैया तू मेरे से पैसे ले रहा, मेरा EMI वापस देगा क्या? You taken home loan, banker will say आपकी income कितनी है? Why they will ask you why, how much is their income? Because what they will say, अरे अच्छा you earn 5 lakhs a month, huh? So how much you will be spending? Generally 50% you will be spending. 2,50,000 is available for you to invest or to pay. So they will give you a loan in such a manner that the monthly EMI that includes principal and interest do not exceed 2,50,000. Otherwise, your debt service ratio will go less than 1. Got my point? Yes. Then interest coverage ratio, preference dividend coverage ratio. So each particular revenue available for that preference dividend divided by preference dividend. Revenue available for interest divided by interest. Capital gearing ratio. So how much capital do you have? Please see this. Fixed cost bearing capital divided by non-fixed cost bearing capital. What does it mean? Non-current liabilities divided by owner's fund. Non-current liabilities are interest fixed cost capitals. They will have some fixed cost in terms of interest, some in terms of preference dividend. So that is fixed cost. I have a total capital of 2 crore, of which 50 lakhs is equity, 1,50,000 is debt. Okay. So how much geared capital is? मतलब 1,50,000 interest bearing, that is fixed cost, divided by 50 lakhs. So 50 lakhs divided by 1 crore, 50 lakhs would be 3. That means I have leveraged 3 times. For every 1 rupee I invested, I made sure other people invest 3 rupees. Am I high? Am I taking higher risk? Higher the ratio, higher the risk. Yes or no? That is why it is called capital gearing ratio. How much capital is being geared, right? Proprietary ratio, that is proprietary funds divided by total assets. Then you have turnovers. Debtors turnover ratio is related to credit sales. Obviously, now why cash sales will come to debtor turnover. So when you say debtor turnover ratio, do you take total sales or only credit sales? Why? Cash sales तो debtor में कभी create ही नहीं हुई ना. Similarly, stock turnover ratio. Do you take this total sales, including sales includes profit, right? Or only the cost of goods sold? Stock is without profit. Sales also has to be without profit. And recollect the example of leverage. Recollect the example of leverage. In leverage, what has happened? In financial leverage for preference equity, one was pre-tax, one was post-tax. So we converted everything into post-tax. Same thing he is asking. Debtors only related to credit sales, not total sales. Stock only related to sales without profit. Raw material only related to material which is purchased, material consumed, not the total material purchased or total sales. Again, creditors are only related to credit purchases, not cash purchases. Right? Similarly, other turnover ratios that would be based on sales. So the relationship is being defined. Relationship, it has to be peer to peer. One thing is for sure, anywhere you go, it has to be peer-to-peer. With the DFL example, you should have understood this. It has to be relatable. If it is not relatable, then it is not a ratio. That is the first line he says. It should be relatable. Total sales are not related to debtors. Only credit sales are related to debtors. Very much simple. Alright. Capital turnover ratio, working capital, all this ratio when we practically learn, we'll get to know. Right. And obviously most of the ratios you know because you have known how to make a income statement. Yes. So we'll start up this problems part tomorrow. There's some theory questions and all. We'll take. Thank you.